Imagine you are standing in the middle of a crowded casino.
Oh, yeah.
Like the lights are blinding, alarms are ringing, and all around you, people are just screaming.
Right. Absolute chaos.
Exactly. Pure chaos.
Yeah.
Some are jumping up and down because they just hit a jackpot, but most are just staring blankly at the tables.
Yeah, having just watched their entire life savings completely evaporate on like a single spin of the roulette wheel.
Right. It is pure, unadulterated madness. But then, and this is the key, right in the middle of all that madness, there is one person sitting quietly in the corner. They aren't cheering, they aren't crying, they just have a notepad, they are calculating the odds, and they are completely surgically detached from the emotion of the room.
Yeah, and that detached calculating person in the corner, that is exactly who we need to be today.
100%. Welcome to Bitcoin Deep Dives by MyCryptoParadise. In this deep dive, we are taking a stack of high-level market research from our lead trader at the Paradise team, Simon.
Simon always brings the heat with these.
He really does.
Yeah.
And we're completely stripping away all that casino noise.
Right.
We know how loud the crypto market can get,
Yeah.
how overwhelming those flashing charts and the social media panic can be.
Oh, it's exhausting for people.
It is. So our mission today is your MyCryptoParadise family, is to put an absolute shield around your capital. We are here to help you navigate these highly volatile conditions, not as gamblers, but as cold, calculated professionals.
Because, I mean, that really is the ultimate battle in this space, right? The professional calculative mindset versus the emotional gambling mindset.
Right.
In the short term, sure, a gambler might get lucky. They might catch a massive green candle and think, wow, I am a genius.
We've all seen that guy on Twitter.
Exactly. But behavioral biases, those psychological traps deeply wired into our human nature, they are exactly why the vast majority of retail traders just lose their shirts in crypto over the long run.
Okay, let's unpack this. Because before we can really analyze why retail traders are making such emotional mistakes right now, we first need to map out the battlefield.
Yeah, we need to look at the surface first.
Right. We need to look at the immediate mechanical triggers that are manipulating the surface of the market. Because the surface is incredibly deceptive at the moment.
It is entirely deceptive. I mean, if we look at the immediate macroeconomic catalysts, we had a massive surge last week.
Yeah, driven by the news regarding an upcoming Donald Trump announcement.
Right. And now, just to be crystal clear here, whether you lean left, right, or completely ignore politics altogether as professional traders, we do not take sides.
No, not at all.
Well,
They just look at the objective data.
Exactly. We simply look at how the market reacts to these events. And the data shows that this specific political catalyst just injected a huge wave of euphoria into the market.
It was a massive leverage-driven pump, violently pushed Bitcoin from, $75,000 all the way to $78,000?
Yeah, right up to 78K.
But then the weekend hit. And over the weekend, we saw this sudden, sharp dump. What's crucial to understand about the mechanics here, though, is that this dump wasn't necessarily driven by a fundamental shift in value,
No, it was primarily caused by futures positions closing. Traders were unwinding their leverage to avoid the weekend gap risk.
Right, and as that open interest bled out, the buy pressure evaporated, the price started sliding.
But then, and this is where it gets crazy, right as the market is falling, it suddenly hits what looks like a concrete floor.
Yeah, a massive buy wall appears out of nowhere. $763 million halts the crash instantly.
And if you look at the real-time data, that wall is actively refilling. Like right now, we are seeing $800 to $900 million sitting just below the current market price.
Which successfully acted as the magnet to close the CME futures gap, by the way.
Exactly. And to the untrained eye, if you're looking at almost $1 billion in buy orders, your immediate psychological reaction is, oh, institutional support has arrived. The bottom is in. Time to aggressively go long.
I have to pause on that, though, because, is this massive buy wall actually real, or is it just a mirage?
It's a mirage.
Because it feels a bit like a real estate developer going into an empty, unsold neighborhood and hammering fake sold-out signs onto all the lawns.
Yeah, just to create a panic-buying frenzy among the few people actually looking at houses.
Right. Is that the kind of illusion we are dealing with here?
Yes, it is called spoofing, and your real estate scenario perfectly illustrates the actual mechanics playing out on the order books right now.
So they aren't real buyers?
No. When you drop down to the 1-minute time frame, you can literally see the gears of this illusion turning. As the price dipped down to actually test that massive wall, the orders didn't execute.
They vanished.
They completely vanished.
Wow. So the algorithms flashing those orders, never had any intention of actually buying the asset.
Precisely. This is largely bot-driven liquidity. The algorithmic trading desks place these massive limit orders to create the artificial appearance of heavy demand.
Right, it props up the price by tricking retail traders into front-running the wall.
Exactly. The retail guys see the wall, assume it's a safe floor, and place their bids just above it. But the danger here is mathematically extreme.
Because it's all spoofed.
Right. Because those massive orders are spoofed, if real, heavy, organic spot selling volume enters the market right now, that artificial floor will evaporate in milliseconds.
The market will just fall right through it into thin air.
Yeah, because the structural support was never actually there in the first place.
Which is absolutely terrifying if you are an emotional trader who just went all in on leverage based on a fake floor.
Oh, it's a nightmare scenario.
And this brings us right to the psychological core of Simon's analysis. Since the market is currently being driven by spoofing and algorithmic illusions rather than organic spot buying, what is this environment actually doing to the psychology of the average trader?
What's fascinating here is the complete glaring contradiction we are seeing in the sentiment data.
Yeah, the data is wild right now.
It perfectly illustrates the exact behavioral traps we're warning against. Look at the fear and greed index. Historically, there's a direct correlation, right? Price pushes up, the index pushes up into extreme greed.
Right.
But right now, as the price is grinding higher, the index is actively declining.
The divergence there is just wild. On the 4-hour time frame, the index is sitting at about a 60, which is, leaning toward greedy but relatively neutral.
Right.
But when you zoom into the 1-hour time frame, the immediate pulse of the market, it has completely dipped down to 40.
Literal fear mode.
Yeah. People are actively scared while the asset price is rising. How does a trader justify that internally?
Well, they don't justify it logically. They process it emotionally through the lens of disbelief.
Disbelief.
Yeah. Retail traders have been chopped to pieces by the recent volatility. The fake-outs, the sudden weekend dumps, the spoofed walls, it creates real market trauma.
That makes sense.
So even when the market pumps, they just don't trust it. They are projecting their own internal loss aversion onto the charts rather than objectively reading the data.
And the data right now paints a very precarious picture regarding leverage. Let's dive into the mechanics of that because the liquidation clusters are telling a very specific story.
Yeah, the heat maps are very revealing.
They show that the biggest long liquidations, the forced selling from traders who bet on the price going up and got wiped out during the weekend slide, those have already happened.
Right, they've been flushed out.
So looking at the current futures positioning, the meaningful long liquidations are sitting all the way down at $73,000. But the short stop losses, the buy to cover orders from people betting against the market, those are clustered heavily right up at $80,000.
And we cannot ignore what is sitting right in front of those short liquidations.
A wall.
Yeah, they are being protected by a massive $449 million sell wall. So if you map out the battlefield objectively, here's what you have. A market pumping purely on disbelief, being propped up from underneath by a spoofed fake buy wall and creeping toward a very real, very heavy sell wall.
Right. And because the biggest long positions have already been flushed from the system, there isn't a lot of current leverage or thick two-way liquidity acting as a shock absorber.
Exactly. What that tells us from a behavioral science perspective is that any sudden spike in volume, whether it breaks up or breaks down, is going to act like a match in a powder keg.
It'll trigger massive reflexive emotional reactions from traders who are totally unprepared. They're going to trade their adrenaline, not the environment.
Which is exactly how wealth is transferred from the impatient to the patient.
Man, that's so true.
Yeah.
So if the goal is to stop reacting to the flashing casino lights and start acting like the calculator guy in the corner,
right?
We have to pivot away from the psychological traps. We have to ground ourselves in the cold, hard, technical data that the Paradise team is watching. Here's where it gets really interesting.
The time frame alignment.
Yeah, because the cyclical nature of this market is currently printing an eerie coincidence on the daily time frame.
It's almost too perfect to ignore right now.
We saw the market create a major local top on March 17th. And now, exactly 1 month later, the market is attempting to form another potential top on April 17th, right at the $78,000 mark.
Yeah. When you align those cyclical dates with the critical resistance levels, the structural reality of the market becomes impossible to deny. Look at the moving average trend line on the weekly chart. It sits exactly in that $77,000 to $78,000 zone.
Which is acting as an absolute iron ceiling right now.
Exactly. Institutional algorithms take profit at these macro moving averages, which is why we are seeing such heavy friction.
And on the daily time frame, the bulls have a massive, exhausting mountain to climb. The mechanical reality is that they absolutely must turn the $76,000 resistance level into solid, confirmed support.
Yeah, and if they can't flip that level, they have zero mathematical chance of testing the $82,000 mark.
None. But the underlying data strongly suggests the bulls are running out of steam. We are seeing a glaring bearish divergence on the MASD indicator.
And we know exactly what it implies when the actual price of the asset creeps up to make higher highs, but the momentum histogram starts printing lower highs.
Yeah, we don't need a textbook to tell us that is a massive red flag. The stochastic RSI is confirming this exact same exhaustion, with both legs pointing firmly downward.
Right. The underlying strength, the actual volume-backed conviction, it just isn't there to support the upward price action.
Right. And to visualize exactly what this means, Simon from the Paradise team has this brilliant analogy for the MASD divergence that just perfectly captures the danger.
Oh, the car analogy. Yeah, that's a great one.
Right. So imagine you are driving a car up a really steep mountain road. You have your foot pinned to the gas pedal, and the car is technically still moving forward.
So from the outside, it looks like you are making progress, which is the price making higher highs.
Exactly. But what you can't see is that your gas tank has a massive hole in it, and you are rapidly bleeding fuel.
Right, and that empty tank is the momentum indicator making lower highs. It is the perfect visualization of hidden weakness.
Because the laws of physics dictate that eventually the fuel is completely gone. And when the tank hits zero, it does not matter how hard you press the pedal or how steep the hill is.
Gravity takes over.
Gravity takes over, the engine stalls, and the car starts violently rolling backward down the mountain.
And how a trader reacts to that car driving up the hill perfectly separates the amateur mindset from the professional mindset.
So true.
The amateurs look at the car moving upward, they see the green candles, and they scream, "To the moon!" They completely ignore the empty gas tank on the dashboard.
They are possessed by recency bias.
Right.
This psychological flaw, where human beings assume that because an asset went up yesterday, it is guaranteed to go up today.
Exactly. They are desperate to catch the absolute bottom and ride the wave, which is the exact emotional FOMO that trapped millions of people during the last major market crash.
While the professional trader sees the empty gas tank, calculates the trajectory, and calmly steps out of the way of the rolling car.
Yeah, they hit the brakes.
Which brings us to the core ethos of our MyCryptoParadise family. Because understanding that the car is running out of gas is only half the battle. Knowing how to execute a professional trading strategy around that danger is what actually keeps you alive in this market.
Right. We have to talk about how the Paradise team prioritizes capital protection over gambling on a fake-out.
Yes.
The absolute foundation of that professional strategy is understanding what Simon refers to as the market's breathing pattern.
The inhale and exhale.
Exactly. Markets simply do not move in straight, unbroken lines. They move in mechanical impulses and corrections. Think of it as the market inhaling and exhaling.
Right.
Right now, to confirm a true trend change, our team is waiting for a strict 5-wave bullish structure.
So we've had this recent pump to the upside, the inhale, but the professional strategy dictates that you never, ever let FOMO drag you into buying that initial inhale.
Never. You sit on your hands and you wait for the market to exhale. You wait for the downward correction.
Why the exhale specifically?
You wait for the exhale because that downward correction is the ultimate stress test. It is the only way to mathematically prove whether those previous heavy resistance levels have actually flipped into reliable support zones.
Okay, that makes sense.
If you pull up the 4-hour time frame technicals right now, you can see why the professionals are sitting out. The current move up is happening on severely declining volume. Furthermore, if we lay down the Fibonacci retracement levels, specifically the 0.618 golden ratio and the 0.786 levels, they are acting as an absolute brick wall for this secondary wave.
So the market is trying desperately to inhale again, but it simply lacks the lung capacity to push through the resistance.
That's a great way to put it.
And we also have to zoom out and acknowledge the macro perspective here. The team is actively preparing for the possibility of a final inhale. A fifth wave in the grand structure, a wave that could actually take the overall market all the way down to the critical $44,000 to $55,000 support zone before a true, sustained bull run begins.
Which is a huge drop.
But I have to push back on this approach a little bit on behalf of the listener who might be feeling incredibly impatient right now.
Okay, go ahead.
If we just sit on our hands, if we wait for all these perfect confirmations, waiting for the inhale, the exhale, the 5-wave structure, the Fibonacci levels to align flawlessly, aren't we just paralyzing ourselves?
I hear that a lot.
Because crypto routinely moves 20% in a single weekend. Isn't this highly cautious approach mathematically detrimental in an asset class built on speed? Aren't we just missing out on the biggest gains?
If we connect this to the bigger picture, that very feeling of impatience you are describing, that fear of missing out, is the exact psychological vulnerability the market algorithms are designed to prey upon.
Wow, yeah.
Is the casino flashing its lights, trying to goad you into putting your chips on the table before you've done the math? As a professional, capital protection is not a catchy slogan. It is the absolute non-negotiable priority. It is vastly mathematically better to sit out and miss a good trade than to step in aggressively without structural confirmation and lose your capital to a manipulated fake-out.
Because if you let a spoofed wall trick you into losing your capital today, you have 0 chips left to play when the actual mathematically confirmed high probability setup finally arrives next month.
Exactly. The amateur genuinely believes the goal is to be actively in every single trade.
Right.
The professional knows the goal is to survive long enough to catch the right trades. You do not need to catch the exact bottom to generate life-changing wealth in crypto. You just need to catch the confirmed trend.
Yeah.
The strategy our Paradise team employs isn't slow. It is surgically calculated. It is treating the market like a sniper, not a machine gunner.
So what does this all mean for you right now? It means that today's Bitcoin market is a highly engineered psychological minefield.
Highly engineered.
We have algorithmic bots spoofing near billion-dollar buy walls to create optical illusions of support. We have a market pushing higher on sheer disbelief, where retail traders are literally terrified of the green candles they're buying.
It's crazy.
We have cyclical, eerie daily resistance levels acting as iron ceilings, and we have a car driving up a steep mountain with a hole in the gas tank. Prices climbing while the underlying momentum actively bleeds out.
And right in the middle of all those traps, quietly waiting for the impatient retail trader to make a fatal emotional mistake, sits the professional strategy.
Yep.
Refusing to guess, waiting for the market to organically prove its strength, waiting for the exhale.
That is the sanctuary the MyCryptoParadise family provides. It is never about guessing. It's about objective data, calculated patience, and absolute discipline. I want to leave you with something truly powerful today. These are the trading affirmations that Simon from our Paradise team relies on to stay grounded. Listen to these words carefully. I think in probabilities, not emotions. Losses are just feedback that sharpen my strategy, and wins are the result of disciplined execution.
That specific phrase, losses are just feedback, is the ultimate psychological shift from gambler to professional.
It really is.
It completely removes the human ego from the equation.
So I want you to deeply reflect on your own portfolio right now. If you were to completely strip away all your emotional attachments to Bitcoin's current price action, if you stopped caring whether it was pumping or dumping this exact minute,
Right.
and if you treated your very last trading loss not as a personal failure, but purely as clinical, objective feedback, what single habit would you change today?
It's a great question.
What emotional trigger are you going to proactively disarm before you execute your next trade?
It is arguably the most vital question you can ask yourself in this current market structure.
But before we go, consider this one final thought.
Yeah.
We've spent this entire deep dive talking about the psychological battle against spoofing bots and algorithmic walls.
Yeah.
But as AI agents become exponentially faster and more sophisticated, capable of spoofing not just order book walls, but entire localized market sentiments across social media in milliseconds, the human reaction time is going to become entirely obsolete.
Oh, that's a scary thought.
Right. If you are still trading based on the feeling of the tape today, how do you expect your human psychology to survive the hyperspeed, fully autonomous crypto markets of tomorrow? Just something to chew on.
Definitely something to think about.
Take that question with you. Trade safe, protect your capital above all else, and remember, you do not have to face the crypto Wild West alone. Your MyCryptoParadise family is here, and the Paradise team is monitoring these markets 24/7 so you don't have to. Until next time, stay disciplined.